All right, so we're going to go ahead and get started. I don't know whether or not you can hear me. Hopefully, you can hear me. I want to make sure that you understand that, firstly, it's time for the Q3 withholding tax reporting. And I think you probably have already done that. But since I'm not sure, I've got to make sure. And so I'm going to just briefly go through that just to make sure that you've done it. And if you haven't done it, that you understand that it's something that we need to walk through together. I would have to have you to pull it up on your screen and we could walk through what it looks like from your end. But right now, what I'm going to do is I'm going to pull this up from my screen. Yeah, so I can get a general idea and give you a general idea of what it's going to look like. Okay, so just bear with me just a second here. I'm going to get this open up. Again, I just want to thank you so much for the opportunity. This is an opportunity for me to just have the privilege to participate in your company's corporate growth. I cannot tell you how much I appreciate this. It's a blessing to participate. I mean, you're continuing to grow, and here you are allowing us the opportunity to benefit um, from the experience of watching you grow. So just for a moment, I want to say thank you for the opportunity to contribute what we have to share, what we've been given to share to continue in the growth of your organization. That's important to us. It's I can't even explain to you the monumental opportunity that it is, because see what happens is that later on, as you continue to grow, it serves as a testimonial to our company. So of course I'm excited. I'm excited because as you do well, then our company does well by default because we were allowed a small opportunity to participate in your continued growth. Okay, so right now I'm pulling up this screen. Oh, my session has expired. I've been on this page for a while. So let's see. Probably going to have to reopen it. Let's see if it'll let me log in again. I'm on the MAT page, My Alabama Taxes. And so I'm doing it from here, but I know if you're in a different state, then you know to do it from your state as well. And some of you are operating in dual states. I have someone that's operating in Minnesota, and then they're also operating in Alabama, and probably going to be a variation of other states as well. Somebody's operating in Georgia, and they're also operating in Alabama. And again, I know it's going to be a variation of states that they're going to be operating in as well. So I'm going to go out of here, out of this page, and get to this page. So your screen should look something similar to this. You should have your company name there. I'm on the My Alabama Taxes page, okay? But your tax withholding account, no matter what state you're in, y'all excuse me, I'm drinking a little tea here with lemon in it. All right. Okay, so it's your withholding tax that you're going to be reporting right here. So you go into your withholding tax. That's if they've given you access. Okay. You go into your withholding screen, and you should have a thing, a icon that you can click that says file. You can click that says file or view returns and periods. You see that? All right. Let's click that. Right. Then it opens you up to your reporting period for each quarter. And what you want to do is click on the quarter that applies. It gives you the dates, and you go ahead and you file. Now, you want to file this in October for Q3. So Q3 is September, August, July. July through September, excuse me, September, August, July, right? Um, you want to, well, you want to, I was trying to tell you the easiest way to do it. Right at the end of September, you are able to apply all of your information into the system beginning October 1st through the 31st. So I would suggest the first day after every quarter, you go ahead and file your report. That's probably going to be the wisest way to do it. You just click on the withholding there, you see, for quarterly, and then you file it. It's as simple as that. Okay. I'm gonna give you an example here. So you go in and you list the number of employees that you have withheld taxes for, state taxes for. You put that number of employees here. Then you give the amount that you are um withholding for that particular quarter. Okay. All right. If you have any kind of credit that you've given for overtime payment, and I think they have discontinued you being able to give credit for overtime payment, but if you have credit for overtime payment, um, of course, it can't exceed the amount that's being remitted, but you would put that amount here. The total amount due would go here. And of course, if you're not going to claim any exemption for overtime that you paid, because you can claim, you used to be able to claim exemption for overtime that's being paid, but it just can't exceed the amount that you're remitting. So if you're not going to claim any amounts for any overtime that may have been paid, then you leave that as zero. Yeah, trying to give you a chance to see that on the screen. I'm right here again. All right, then you just click submit. Okay. It's going to have you to put your password in again. I have a problem remembering my password. So I don't know. I might have to come back and do this because I always have to look it up. Maybe it's already in here and I can just click what's already in there. Okay, good. But I hope you understood that process. I wanted to walk you through it so that you could see hands-on how you're supposed to do it. Okay. So hopefully that has helped you with that portion of the reporting. All right. I'm going to stop sharing my screen just for a moment. And I may have to close the blinds because the blinds are shining in and I don't know what it's doing in terms of what I look like in the screen. So, but anyway. All right. Now, the next part that I wanted to get to is we're going to share some from the title abstracting made simple. Now, that part just came from Easy Corporate Comprehensive Curriculum for new business owners. That's because I've got to help you keep up with your corporate reporting. And I know last conversation we talked about filing your withholdings. And I know that I remember hearing that you had filed your withholdings for your state. I just want to make sure that if you are servicing multiple states, like if you're covering Alabama too, and I know that one person specifically is covered, well, two people I know are covering Alabama. One's Georgia, one's Minnesota. Another one is Tennessee and Alabama. And then we've got one that's Texas and Alabama. I want to make sure that everybody is filing their Alabama withholdings. Okay. I want you to file the state that you're located in as well. But if you're operating as a foreign company in Alabama, I just want to make sure that you're covering everything that you're supposed to here so that there's not a problem. And if you haven't already filed for your state, please get that done. You're going to go to a page similar to what I just did. It won't be my Alabama taxes, but it will be the withholding tax for the state revenue in your state. Okay. All right. So I want to go to, let's see. Quickly, I'm going to visit tax certificates, just really, really quick. Because I know some of you have, you've been issued property via tax certificates, right? So I want to make sure that you understand about tax certificates. So one thing I want to say to you regarding tax certificates is that there's a timeline that's involved, and it starts whenever that person is delinquent for their taxes. uh, um that's when that timeline starts for purchasing tax certificates. And so what happens is, when you pay the taxes on a piece of property that's been delinquent, then there's a process that spans over 3 years that gives you an opportunity to own that property. But the seller has a right to redeem the property. In Alabama, it's 3 years. In some states, it's up to 1 year that they have a right to redeem the property. And in places like Georgia, there are no redemption laws. There is no way for you to redeem that property. When you lose that property because of taxes, then it's just gone. I think in Georgia they have started to allow you up to a certain amount of time to redeem the property after a tax sale, which is good. Now they don't have any foreclosure redemption, but I think they have started allowing you to redeem the property up to a certain amount of time after that property has been lost for tax purposes. Okay, so it's an instrument. A certificate is an instrument that is going to allow whoever the investor is, whoever you're called the investor when you pay those delinquent taxes. It gives you the right to pay those taxes on behalf of the property owners, and you get to earn interest until that debt is repaid. You're earning interest. So if the property owner never ever redeems the property by paying their taxes, then you move into a different step. But let's say they pay the taxes, then they not only do they pay the taxes and pay you, but also they pay interest. So when they pay the taxes, the county pays you. You're earning interest on that money that you pay. You can't lose, because if you pay the property taxes, and let's say they redeem the property and you don't get a chance to get the property because they redeemed it, you still earn interest on the money that you use to pay the property taxes, and the county will refund you, or not necessarily refund you, but they'll pay you the money that the taxpayer paid for the taxes, plus the interest that you accrued from the funds that were being held by the county for the taxes. All right. That's the process of purchasing tax certificates. Now, why am I talking to you about this? Because you are a business owner, and in several different states, i.e., Alabama is one of them, you can go in and you can purchase tax certificates by paying the delinquent taxes on other people's property. Yes, ma'am. Yes, sir. Mm-hmm. The benefit is it's like putting it into a high yield bond, because you're going to get a certain amount of interest. In some counties, it's as much as 16%. Do you hear me what I say? Right. So just by paying, and you can't get 16% anywhere. So just by paying their taxes to the Revenue Commission office, the tax office, in your tax commissioner's office, depending on what it's called in your state and in your county, by paying those taxes, you put yourself in a position to earn interest. Yeah. So at the very least, if you don't get access to the ownership to the property, you gain interest. You get your money back and you gain. It's a surefire way. It's not like you get your money back based on the market. You get back the amount of money that you paid for the taxes. Yeah. Plus any interest. So like in states like Alabama and some other states, properties get sold for tax liens. Okay, that's after the redemption period is up. And then once so the way that works is you receive a certificate of purchase. And I believe some of you have received certificates of purchase. And if you've never heard of this before, I am teaching it to you as a part of your curriculum, because as a business owner, there's going to come a time when your business is going to grow. It's going to grow to a point that you're going to have quite a bit of revenue coming in. And the way that you can build a nice portfolio financially for yourself, instead of just working from hand to mouth, or trying to put the money in a regular account where you're not really going to accrue that much interest. This is a way to benefit you. And so some of you are taking dual classes. You're taking the title abstracting made simple along with the easy corporate comprehensive curriculum. Okay, so for those of you that are taking the title abstracting, this is a part of that course. You won't find it in the book because it's an additional benefit. So a lot of the things that I teach, you won't see in the book. Now, there are a lot of things in the book all of the curriculum that you need to complete your certification for title abstracting and to move on to studying for the title agent um, class and testing. That's in that title abstracting made simple. Every single thing that you'll need, every single thing that you'll need for your certification as a abstractor, and also everything that you'll need to move you into now taking the course for the title agent. All that stuff is there. It's all in there. This is additional information that you need for that course because it helps you to benefit. And if you need to do a title report to check the title before you start to pay the taxes on it, you will know how to do it because we're teaching you in this class how to research the title. Yeah. So see, title research is beneficial to you for several reasons. Because if you decide that you want to start paying the delinquent taxes on different properties that are in your county and your state, with the intention of firstly investing the money in that way because you're going to gain a certain amount of interest from it regardless, and also a way for you to obtain property. I know a young couple here, they paid the taxes, delinquent taxes on a piece of property, and after the 3-year redemption period they were given a certificate of purchase, and then they went, I think 6 months after that, and they were able to receive a warranty deed, excuse me, a quit claim deed from the county. They now own that property. They live in that property. They refurbish the property, remodel it, and it is beautiful. But they bought it from the small amount that they paid for the taxes on the property. Yeah, yeah. So when that certificate of purchase is issued, then that means that you have become a successful bidder on that property, if that makes sense. You've become a substantial bidder on that property. That means that you have first right of refusal. Yeah, so that document is like final proof that you've paid the delinquent taxes and the penalties and the fees on behalf of the owner on this property. Is signed by the tax collector of the county, whoever that official person is. It includes all the details on the property, like the legal description. That's another reason why we're going through this in the title abstracting portion, because you need to know how to read the legal description to make sure that it's the right legal description. And if you have this book, Title Abstracting Made Simple, then you're going to find the portion that has to do with legal descriptions. That's going to be in chapter 4. Yeah, chapter 4 of the book. It talks about legal descriptions. It even has a description of the right here. Here it is. It has an area there that explains the grid. It also explains to you how to find the baseline for when you're looking at the section, township, and range. It even has a drawing, an illustration of the section, township, and range, and how you can determine when you are reading a legal description or even writing a legal description, how to set up the descriptive meets and bounds. So you'll need to know the legal description that's going to be on your tax certificate, because you want to make sure that it's the right legal description, because they do make errors. And this is such a tedious process, and it's so close, and so many things could happen. You want to make sure that you got the right legal description. It's going to show the right amount that you paid, any interest that's accrued or that will accrue until the redemption time. And that means that if they redeem that property, they owe you all of that accrued interest plus the amount of money that you paid for the taxes. Yeah, it's a win-win situation. Yeah. So now you don't own the property yet, not at this stage, because you got to get past the redemption period. And the redemption period is the amount of time that the owner has to redeem their property. Again, why am I talking about this? So for some people, when you are starting your corporation or you're getting your business lined up, the only thing you could think about is, I gotta get more business, I gotta get more business because I gotta pay my bills, but you're not trying, you're not seeing a way to come out of the rat race. So even if you get a ton of business, you got to set yourself up so that you can build assets. Why are you building assets? Because you're either going to digress or you got to progress. So just to build business and now you're still working it, that's not fully a fully operational model of a corporation. You want it to be so that you're able to actually hire other people and employ them and help the community and provide tax viable taxpayers to the community. And you want to be a viable taxpayer as a corporation, to bring to the table some assets in your community. Okay, to do that, you've got to build assets. The best way to do it is the easiest way. When you're paying delinquent taxes, you're providing yourself an opportunity to invest. But if for some reason the owner pays the taxes and redeems the property, you now have all of that interest that's been accrued, plus you have your money back to go and do it all over again on a variation of properties. You can do have tax certificates that you have in Georgia, some in Alabama, and in other states. So there's all not all states participate in this, but a variation of states do. And you don't have to live in that state to purchase tax certificates there. Okay. All right. Just want to make sure you got that. So the certificate entitles the holder to earn interest on the amount that they paid. Everybody got that? Yeah. All right. So when the property owner pays the property taxes, if they pay them, then, like for instance, in Alabama, the redemption period is typically 3 years. And if the property owner pays those taxes, they have to pay the full amount of the taxes that you paid plus the interest. Yep. The county gives you your money back plus the interest. So this certificate just grants you certain rights. For example, it can be transferred if you want to assign it to another party. Let's say you don't have children, but you want to give a gift to the church. You can transfer this or assign it to the church. You can assign it to certain ministries. You might have a LLC that is a nonprofit. You can assign it to the nonprofit. Yeah, you can. You sure can. All you have to do is provide an endorsement that's notarized and recorded with the tax office. Now it gets even better. You can buy the tax certificate in your corporate name. Yeah, you can buy the tax certificate in your you can pay those taxes in your corporate name. They'll issue the certificate in your corporate name. Yes. Yes. Mm-hmm. So you can sell or you can trade the certificates even before the redemption period, before the owner pays the taxes. And again, if they don't pay the taxes, you move into a position of becoming the owner of the property. And that's what we're going to talk about now. Let's say they don't pay the taxes at all. They go beyond the statutory period and they haven't paid it. So what happens is that the certificate holder can then initiate proceedings to acquire the property. So how do you do that? Well, I'm going to talk about Alabama. In Alabama, it involves applying for a tax deed through the probate court. You're going to apply for a tax deed through the probate court. Then, once the probate court grants you that tax deed, it conveys ownership to the investor. Yeah. Yeah. And the way that you apply for the tax deed is you simply provide them with the proof that you've been paying the taxes, along with if you've got like a purchase certificate from the tax office, you also present that to them and the time frame in which the taxes begin to be delinquent. All of that is in the documentation that you have, your certificate that you have. And when you present that to the judge of probate's office, you request a tax deed. Yep. Then all they're going to do is just run it through, make sure that the tax lien was paid and that the property is free of any tax liens that have to do with those delinquent property taxes. It might be subject to other encumbrances now. That's why you need to know how to do your own title abstracting. And that's why I'm teaching you from both courses, because you'll need to be able to check the title to make sure that there are no other encumbrances, and we teach you how to do that. Okay, so what you understand about this certificate of purchase is that it's a pivotal document in the tax lien process. It confirms the investor's financial stake and any legal rights that have been initiated, any type of redemption timeline that's involved, and then it sets the stage for you to either be repaid for the money that you've invested along with interest, or you can eventually become an owner through the foreclosure of the property. Okay, so I want to make sure that you get that you understand the benefit of what's happening. And I'm going to stop right here, but I wanted to make sure that you understood that. And you can go in and find out which states do this, because it's a wonderful way for you to invest. Somebody may only owe $600 on their taxes. You can invest that $600, and you may want to do that for a different property. Somebody may owe $400 on the taxes. You getting what I'm saying to you now? Yeah, it's a wonderful way. And if all else fails and they pay their taxes, they got to pay you that interest. Yep. Yep. So for instance, in some states, every state sets its own rule. You know, it sets its own rule in terms of what the interest is in terms of tax deeds and all of that. I know that in some states you can get all the way up to 16% on your return. That is unheard of. Okay, guys, I'm gonna stop it right here, and we're gonna switch gears. We're gonna come out of the title abstracting, and we're gonna go into um, that was a part of the title abstract. And then you let me know if you think that was interesting, because I got and I've got some customers, believe it or not, who have those tax certificates, and it is so exciting to me. Oh, there was one thing I wanted to say. And okay. So when I'm talking about these things, I want to make sure that I've given you the full advantage. And I keep thinking that there was one thing that we probably did not talk about. But at the same time, I want to have time to get all of this information to you. So, tell you what, let me just say this to you. If you have a tax lien certificate, I want to also let you know, in addition to be able to trade it or assign it to another party, you also have the right to collect the debt from the property owner, including interest accrued over time. Now, I want to make sure that that's understood, because you can do that. This is considered an asset. It's not just a piece of paper. As soon as you get it, it's considered an asset, and it should be added to your financial statement as an asset. Yeah, and because it can't be liquidated within 12 months. So it's going to have to be a long-term asset, a non-current asset, but it is an asset, and that it can be added to your financial statement. Now, in some states, they'll let you add the whole value of the property to your financial statement as an asset. Yeah, and then in other states, it will allow you to add the amount of the taxes that you paid along with the interest for each year. So let's say it's 3-year redemption. You can actually claim the amount that you paid plus the 3 years worth of interest, and you can add that to your financial statement as an asset. Yeah, and the reason why you're able to add it as an asset is because that certificate gives you the right to be able to collect the debt from the property owner, so it becomes an asset. Yeah. Mm-hmm. Okay. All right. I just wanted to make sure I covered that part. All right, now let me go out of there and let's get to really quick. Well, you know what? I'm going to stop you right here, because we already talked about your state withholding. We talked about the state withholding, and we talked about how you could collect on your state withholding, how you could file your return for your state withholding. So I want to make sure that you have that. I wanted to say to you guys that you may want to consider forming a holding company for your corporation as well. That's a separate legal entity. It's created so you can own and manage any stock or assets of any other companies. So, like if you're a C corporation and you want to establish a holding company, um, it's going to start with you creating a new entity. So, for instance, if you have a LLC and you have a C corporation, you can make the C corporation a holding company. Yeah. Yeah, you can make it a holding company, so that you can hold any kind of equity for your stock in your LLC, any kind of subsidiaries. It can control any kind of tangible assets like real estate or equipment that you get, or any type of intellectual property that you may have that you've created. You want to get it in a holding account so that you can protect it, a holding company so you can protect it. Right. So if you've already filed your articles of incorporation, let's say you have two entities, you've already filed your corporate documents for both of them. So what you would do is you would transfer any shares or assets from any operating company to the holding company. So from your LLC, you would transfer them to your holding company, which would be your C corporation that you've already filed. Right. Now you may have to restructure the ownership in terms of executing like an asset purchase agreement, which we teach in this course, and we provide the template so you could use it hereafter. Yeah. And then like the original LLC becomes a subsidiary of the C corporation, which is going to be operating as a holding company, and the LLC will be under the umbrella of the C corporation. We've talked about this before. I want to keep talking about it, and then we're going to jump into actually preparing the documentation to walk you through it for those of you who want to do it. Okay. All right. So when we look at the taxes and complying with the taxes, I'm going to have to stop. But let me just say this. Both accounts have separate EINs, and the banking would be set up so that it would show that it's a holding account, right? Okay, it's going to show that it's a holding account. If you already have an account established under that particular corporation, you can establish another account, and it can be labeled as the holding account. Right, that way you can ensure that you're complying with all the state regulations and everything. It's showing that it's a holding account. The benefit is that it's going to protect and isolate any valuable assets that you have. Now, you don't wait until you have valuable assets to try to set this up. You're setting a shell, you're scaling your company. You're setting up the framework so you can grow into this. Right? You don't wait until you grow to try to make it work. You set up the framework so that you grow into it. Yeah. All right. It also enables you to have like one centralized management as your company begins to grow. And then you can just keep adding subsidiaries under that holding company, and that protects your assets. Yeah. So it's like a double protection, a double security. And it helps you when you want to do some strategic tax planning. And I'll teach you that on a different course. But across all the entities, then you can start to set up some strategic tax planning across the different entities that you have to protect you. It's not difficult, it's easy. And once you get it, it can be your way of practicing all the time. Yeah. If you ever want to get involved with a joint venture with another company, if you want to start buying different things, acquiring different things, it's an investment leverage because you put it all underneath that holding company. If you want to raise capital, listen, companies love to see that you have a holding company because they feel more comfortable in investing because the structure is designed to protect assets. So they feel more comfortable in investing in your company. I am going to stop right here. I hate to stop so abruptly, but the time dictates that I stop right now. And so I'm going to say thank you so much. I'm so sorry for the sun that's shining in. But anyway, thank you so much for this opportunity again, like I've mentioned before, to be able to participate in your company's continued growth. Reach out to me if you have any questions. Thank you. Oh, I'm going to send you a copy of this recording along with the written summation. Thank you.